Welcome back. Let's get into this market picture now, and it certainly has been a bit of a mixed bag this afternoon in particular. Having started off early this day with a bit of a mixed trading picture out in Asia then, and that comes because we saw the Hang Seng and the Shanghai Composite go into positive territory, more than 1.7% gained as well out in China then for the Shanghai Composite, 1.74% in fact. The Nikkei, however, in Japan didn't manage to solidify any gains, unfortunately. 0.75% weaker today in that trade. So a completely mixed picture there, pushing the rest of the globe to perhaps not be sure as to where it sits as well. Increased coronavirus cases, perhaps less of an opening up of global economies means that the world is not necessarily sure as to where things will lie at this point in time. So Europe is sitting in negative territory, even if it is ever so slightly for the FTSE 100 out in London. The CAC 40, though, enjoying some good numbers, 0.75% on there. Locally, a good day overall. 0.75%, should I say then, as well for the local index going up there as well. The big counters to have gone up today, though, the banking and financial stocks, so enjoying some positivity on that front, perhaps trying to find the positives here, while the gold indices have also got, the gold index, should I say, has gone up more than 2%, with resources only marginally higher. So the platinum shares not necessarily helping on that front either. Industrials, though, almost 1% to the good as well. So a good trading day to kick off with on that front there. Onto your commodities board. Well, the Brent crude price, not much to really speak about on that front, whereas supply is continuing to be the big question mark as well then, while the United States, of course, has a demand issue perhaps, as we see that part of the world perhaps restrict movement again as coronavirus cases flare up. Texas alone seeing more than 10,000 cases all in one day. That country then seeing more and more records continue to fall. If they close out that economy, it means that more and more people unfortunately won't be able to buy fuel or have no need for it, which would then push the price even lower in terms of demand. So pretty much mixed picture as well for the remainder of the commodities. Platinum down while gold is sitting above that 1,800 mark, $1,801 a fine ounce there, 0.33% higher on that front. In the currencies, well, it just sits above 17 Rand against the US dollar. It does the local currency. One had hoped that it would stay below 17, but unfortunately it's not to be at present. 19.20 for a euro, and a British pound will cost you 21 Rand 35 cents. Michael Traherne from Vestac Asset Management, happy with the Rand where it currently sits? I mean, I would have hoped that it perhaps stays under 17 Rand for a little bit longer, but not to be. Our own issues still in the way.
Yes, Arabile. Obviously, we've come from mid-19s to 17s, so we can't complain too much. But it would be a lot nicer if we were closer to that 14 level where we started the year at. It does look like a big driving factor, though, is a bit of a rush towards safe haven assets, and that means selling rands, buying dollars. And that seems to be what's happening this morning. Is it's more a dollar story than a rand story. And that's partly, as you were saying, due to the fear of a second wave of outbreaks. But there's also a bit of tensions brewing between the US and China, and investors feeling a bit nervous and buying dollars just as a precaution.
What happens though for the long run? I mean, if you're looking at emerging market currencies, is the fear still just based on the fact that the world economy is not necessarily looking too good, or have we perhaps moved past that and we're now looking at basic fundamentals and whether economies can recover from the pandemic and how it's struck those countries as well? Because I suppose now the market, I mean, has continued to go to record highs, particularly out in the United States.
Yeah, so there's lots to unpack in there. The first thing to note is that we're at record low interest rates globally, where parts of Europe you've even got negative interest rates. And as interest rates come down, stock markets go up. That's one of the main drivers behind the record levels that we're seeing. On top of that, there's just not enough data at the moment to know exactly where we are. Next week, we see a lot of earnings numbers come out of US companies as well as South Africa companies. And that will basically tell us how badly companies were hit, and probably more importantly, as you were saying, is how quickly they recovered. So we'll only know the information start to trickle through next week, and then really a torrent towards the end of July. And that's what really matters, is how quickly can economies and countries rebound. and that's how quickly you get back to normal. It is worth noting that even though we're seeing a spike in new case numbers, that we haven't seen death numbers increase as much, and that probably points towards global healthcare communities getting a better handle on things. But again, there's not enough information, and a lot of people are guesstimating it at best.
Yeah. All right. Michael Traherne, who are Retailability?
Yeah, so they are a private equity company. They own, probably their best known brand is Legit, which they actually bought from Edcon, I think it was in 2016. And now in news out yesterday or this morning saying that they're looking at buying Edgar's from Edcon. So that's quite an exciting deal. It means that the brand survives, the Edgar's brand survives. But probably more importantly is that when they take over this, you might find that not all the stores survive or the footprints of the stores get smaller. But the most important thing is that a lot of the jobs will be saved. They're buying the business to continue running the business. And if the business continues to run, it means that the jobs are saved. If you're a shareholder, though, in Edcon, you're probably not getting much from this deal, though, unfortunately.
The big worry then becomes, even if you're able to stave off, and this comes into the stable then for Retailability, is the business actually sustainable in its current form? And then draw the attention to Legit, and as you mentioned, is a formerly belonged as well to Edcon as well, and now forms part of Retailability. The Legit brand hasn't necessarily grown much either, although it is still surviving. So is Retailability perhaps a prospect where you look at it and think, okay, they have enough of a good background to perhaps push things along? I mean, not much is really known about them.
Yeah, so they are a private business, so it does mean that information is limited. It is worth noting, though, that they wouldn't be buying Edcon unless they got a good price for it. More than likely, they will be buying the Edcon brand, but not much of its debt obligations. And not having debt obligations is something that can help the brand survive. So Edcon and Edgar's at the top level were still making a bit of money. Their big problem was this massive debt burden that was weighing them down, and probably too much square meterage in terms of shops. So I wouldn't be surprised that the new owners would be negotiating with landlords to have lower rent and smaller shops, but also not to take on a lot of the debt that Edcon was originally struggling with. So they will be giving themselves a good runway.
Okay. Well, certainly gets interesting.
What is key, though, is that you go, the longer it drags on, the worse it is.
All right. Well, here's a company that's trying to get itself out of the doldrums, and now they had said that they could perhaps sell off or perhaps make sure that their claims that they have could be settled with around 190 odd billion rand. And now they're trying to sell their Conforama France segment as well. How big a deal is that?
Yeah, so Steinhoff bought Conforama just after the financial crisis in 2008. It looked like a brilliant deal. It was always the jewel in the Steinhoff crown. And they're selling this off now for what they call a nominal value. The Conforama business was struggling before this. It was already loss-making. You add COVID into the mix, and Steinhoff was saying that they weren't sure if Conforama was going to survive. The part of selling Conforama is to ensure that the business survives. There's not much in the way in terms of what the Steinhoff shareholders will get. It is worth pointing out that the claims that the Steinhoff is looking to settle, the claims amounts are about, or the legal claims are about 190 billion. But I'd be very surprised if the settlement is even anywhere close to that. That's sort of what the lawyers are pitching, and they'll probably settle for something a lot lower. Steinhoff just doesn't have 190 billion rand to give. They almost bankrupt as they stand. And if you look at their last financial set of results, the directors were very direct in saying there's a lot of headwinds, and the business might not survive all 12 months of the year. So it's still tough there, and I would probably avoid Steinhoff if I was a retail investor.
Yeah, that share price makes that company valued at, barely 4.5 billion rand actually. So really doesn't help on that front. We're going to see how things fare there. Michael, appreciate the time. Thank you so much for that. Michael Traherne is from Vestact Asset Management, helping us unpack the latest in this market picture there.